From Barangaroo Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Hello, and welcome to the COB on this Friday afternoon. Cheers to you.
And to you. Cheers to you, Nadine Blaney. I'm Juliette Sarli on a flat day on the market.
Yeah, all right, let's get to work then. All right, so here we go. Here's a look at the CBOE Australia Index. Yeah, not a lot happening. I suppose a few things going on in terms of waiting for tomorrow. We do get that update coming from Chinese authorities in relation to stimulus, which was a bit of a fizzle midweek, you've got to say.
I know I've said this a couple of times, but I did really like Chris Weston from Pepperstone's point that authorities are not going to be bullied. They'll do it in their own time, but certainly everyone we've been speaking to today is suggesting we will see some more stimulus over the weekend. And I was talking to Michael McCarthy from Moo earlier, saying there are a lot of China sort of trade stocks that you want to be exposed to in the Aussie market. Let's though get to the themes of the day today on what was a little bit of, I guess, a flat Friday. So not much movement at all. When you look over the course of the week and take into, I guess, the full 5-day action, if you look to last week, I think something like about a 0.9%, but then flat when you go from where we finished to where we are now.
Yeah, so look, it was that kind of a day. We had iron ore futures edging higher as we await that Chinese stimulus. When it comes to gold, though, it's very much an interest rate story. We did have that data out in the United States, inflation coming in a bit hotter than expected. It was a really good day for some of those gold plays.
Yes, and also Daniel Hines from ANZ telling me don't forget the second player, silver. It's creeping along as well. Second bazooka we mentioned potentially that we might see coming through from China. But let's have a look at some of the sectors. Energy, of course, still very much in focus. The humanitarian impact of Milton, terrible, of course, but we're continuing to watch what is happening with crude and amidst the unrest in the Middle East. But I've got to say, from this time a week ago, it does seem to be that things have dissipated somewhat. There was that real concern over the weekend that maybe Israel would attack Iranian oil facilities, and it seems like potentially there's been a little bit of a reprieve.
Well, look, if they can walk back any of it, just a bit, that would be very helpful. Cooper Energy, the best performer on the page, up by 1.25%. Here's a look at some of those gold miners. Newmont up by a solid 2%. Regis Resources, one of the best performers on the 200 today, up by 4.8%. And on the call today, I'll give it a little bit of a plug, we had Catalyst Metals, so that is a small gold miner, gone gangbusters this year. Why? It's unhedged. So it's really reaping the benefits of this gold price story.
And I got to say, credit where it's due, Jonathan Takadina has been saying that about that stock from MPC Markets. He also told me today that out of those five, because we had this exact chart up, his pick in terms of what's looking undervalued as you see gold rally would be De Grey Mining, which is $1.43.
Okay, so it's up by 2.5%. A quick look at the tech names, and I think that's going to take us quite nicely into some of our top corporate stories as well, because billionaire WiseTech founder Richard White offloading around $60 million in shares in the company that he founded. The share price off by 1.4%.
SiteMinder, though, gaining. Jarden has hiked its price target on the stock and upgraded it to a buy.
Ventia has hit an all-time high. It got a big contract with the NBN, finishing the session up 1%.
And Seven Group Holdings from November 18 will be SGH Limited, and something which is great for all of us who are always typing in codes, it will be renamed SGH as well on the ASX.
Yeah, that was a good one. Appen is in a trading halt. It's announced a $50 million underwritten insto placement, also providing a trading update. Revenue down by close to 13%, but it was trying to talk up its underlying earnings, so it's now cash profitable on an earnings basis. It was the stock of the day.
It was the stock of the day. You had Dean Fergie and Luke Winchester joining you. Let's have a listen.
I find today's announcement quite contradictory. I don't understand how a business that previously had, I think, 35 million in cash on its balance sheet, so pretty well funded, and they're just saying, hey, we've just gone profitable, our business is improving, they've got cash, now they're saying, can we have another 50 million bucks? Like, that says to me this profitability is only short term. They're going to be throwing a lot more money into R&D.
Look, I think the shine has certainly come off Appen. We saw the longer term chart before. I think the market, as you said, Nadine, is well and truly keyed onto the fact that these guys aren't a direct beneficiary of AI, or sorry, like their products aren't directly using AI. It's that picks and shovels type play, and you see it in the gross margins. Gross margins are still 37% or something like that. So, it's tied to it, but it's not directly in that space. There's certainly some better ways to play it.
So, look, that was Dean Fergie from Scion Investment Management's first time on the call. I enjoyed the program.
Was it really his first time?
Yeah.
Oh, wow.
So he joins us. For those of you who listen to just this in podcast form, look, the likes of Dean joins us regularly on the channel, so ausbiz.com.au. But yeah, not all of our guests go on the call. It was fun, and it was all small caps. So I think there was one double buy in there if you'd like to go to the website and take a listen.
All right, let's get to our Friday guest now, and welcome to the COB, Shane Oliver from AMP. Shane, Nadine and I were just saying that we are thankfully in a little bit potentially of a better position than when we spoke to you last Friday, when we were very worried that maybe something would escalate on the weekend. Where do you see the conflict? I know there's still quite a number of scenarios if we do see Israel and Iran ramp up the altitude here.
Yeah, I guess it's still a bit of a waiting game, but our view would be that, yes, there will be a retaliation. It may well be the case that Israel is waiting to deal with Hezbollah first before then starting a new front with Iran. But I think there will be some sort of retaliation. Just trying to work out when it occurs is a bit difficult. We'll probably avoid seeking a situation where Iran then escalates in relation to oil. So I suspect we may well see an attack on an oil refinery or obviously military targets. But I think Israel, under pressure from the US, will probably avoid attacking oil production or oil export facilities. So consequently, the impact will be somewhat limited. Now, of course, this situation could go on for a long time, particularly given Iran's nuclear capabilities and the concern that it will eventually get a nuclear weapon, and Israel won't want that to happen. So there's still this risk out there that even if the situation calms down in the short term, with oil prices settling back down, that it could flare up again, particularly given what happens in relation to Iranian nuclear capabilities. So ongoing issues around this, still a risk there, but I think probably not enough to disrupt the global economy or cause a big surge in inflation.
Yeah, so that's good. We've got oil up by about 10%, but I did read in your note, which I would encourage everybody to try to get their hands on. We'll put a snippet of it in our newsletter tonight. So you don't reckon that the inflation story will be driven by oil. And it goes to a bigger point that you make in the note, Shane. And it's the second time I've been talking about it today, this Goldilocks scenario that we're in right now. Not too hot, not too cold when it comes to economic conditions.
Well, that's what's keeping markets happy, basically. There's all these threats out there. Hurricane in the US, port strike, which came and went almost as quickly as it started. Middle East problems, Red Sea earlier this year and continuing. But ultimately, you're still seeing a downtrend in inflation, and underlying inflation numbers sort of look okay. I know we got some slightly higher than expected numbers out of the US overnight, but they weren't particularly problematic. And when you look at the components that drove it, some of them look to be typically volatile components like used car prices or airline tickets and so on. So overall, the picture still looks relatively benign, and that's why share markets are still managing to grind ahead. Only yesterday or the day before, I think US share market made a record high. Aussie shares not that far off a record high. Pretty good gains year to date. Investors basically saying, well, profits are still rising. Looks like we're going to see another quarterly reporting season in the US, which is reasonably favourable. And at the same time, central banks are gradually cutting interest rates, but not in a bad way. If we were getting rate cuts to fight against recession, it wouldn't be so good. But they're getting rate cuts because the inflation problem is coming under control. but growth is still good. So overall, it remains pretty much a Goldilocks scenario. Now, of course, if you're in any particular country, you might argue with that. New Zealand is in recession, lots of spare capacity, tougher times in Europe and so on. But the broad picture is still quite reasonable. And you can also see in that chart there, which I think highlights that we didn't raise rates as much as other countries. We're the red line, Australia, and we took a little bit longer to start raising rates. So some of those countries may be ahead of us, but they only started cutting because they had tightened rates before we did and went higher than us. So I wouldn't be particularly alarmed given that the RBA is still lagging, but I think it is just that, it is lagging.
Now, you, Shane, and your team have always sort of been, I guess, a little bit ahead of the curve in terms of when you're calling the RBA might cut. What was your view from the minutes this week in terms of whether or not they have started to turn the ship around somewhat with their language?
Well, possibly they have. I'm a bit surprised by the minutes. It seems a lot of RBA communication since the change earlier this year, since Governor Bullock took over, has become somewhat simpler if you read the Statement of Monetary Policy. But one exception to that is the minutes. The minutes seem to be getting longer and longer. I think we're up to 12 pages now. Maybe the text is bigger. But
it's a two-day meeting as well. Two-day meeting.
No, two-day meeting, so maybe there's more to talk about. But it takes longer to get through the minutes. To be honest with you, I didn't notice a big change. They're still hawkish and cautious, but they did leave out the line that they didn't expect to be cutting interest rates in the short term. Now, of course, you may recall that Governor Bullock did use that line in the press conference in response to a journalist from Reuters, I think it was, a fair way into the press conference. So that sentiment is still there, but it wasn't in the minutes, and that can obviously could be a telltale sign that they're getting a little less hawkish. But we've still got a fair way to go. Our base case is for a cut in February. I think to get a cut in December is not out of the question. It could happen, but we do need a good September quarter inflation report, which we get in a couple of weeks' time, with a downtrend in trim mean or underlying inflation. And we probably also need to get higher unemployment and probably lower trim mean inflation in the October CPI, which will come out at the end of November. So I think it's very hard to get a November rate cut short of some sort of financial crisis or something, but a December cut is possible if the trend remains down. Now, that chart we've just put up there shows the trim mean inflation from the ABS, that's the black line, against the Melbourne Institute's trim mean. There's no perfect relationship between the two, but there's a pretty good one, and the decline in the trim mean as measured by the Melbourne Institute, which is like a version of the monthly CPI indicator, perhaps with less components. But it at least goes up to September, and so it gives you a bit more of a lead there. And it's telling you that momentum remains down in trim mean inflation in Australia, which is good news because it ultimately means that inflation is coming under control. Yes, there's issues in housing, insurance and so on, but if you look at the trim mean, it looks like it's gradually getting back under control.
Just quickly, it's been obviously we all have whiplash from watching Chinese markets when they pre the holiday and then when they came back online this week, and the disappointment midweek when it came to that media conference that was held. But more importantly, tomorrow, how. And what are you expecting? How well positioned are markets? What are you expecting tomorrow from the Chinese authorities, Shane?
Well, I think they're better positioned than they were. The Chinese share market, the Shanghai Shenzhen Composite, had rallied 33% from its levels just before the start of the stimulus announcements 2 weeks ago. So massive rally, 1/3 rally in the share market. It got ahead of itself. There were expectations when the Chinese reopened from the October holidays that, we'd get immediate announcements in terms of the details regarding fiscal policy. And of course, the NDRC press conference didn't deliver, but the NDRC is focused on reform and structural issues, not so much fiscal stimulus and fiscal policy. So maybe they weren't the mob to announce it. So there's a lot of expectation now that there will be an announcement or more details anyway. Tomorrow, it's 10 a.m. Beijing time, which I think is probably something like 1 p.m. here in Australia in Sydney time. So, time will tell. The only thing is that the Ministry of Finance may actually require the approval of the National People's Congress or the relevant standing committee, and I don't know that that's been granted as yet. So we can still have another round of disappointment tomorrow. So it's still a bit up in the air. I think we will get something, probably not enough to solve all of China's structural problems, but probably provide a bit of a cyclical boost. But it could turn out to still be a few weeks away before we finally get the full details.
All right, let's end the week on a positive note, Shane. We were reading your note. You are looking at the Pet Shop Boys and Coldplay.
Well, that started because Diana Messina, my colleague, was telling me she's off to see Coldplay in a few weeks' time. And I thought one of my favourite Pet Shop Boys songs is Where They Cross Vida A, I think I'm pronouncing that right, which was from their album about 1996, I think it was, with Coldplay's classic song Viva La Vida. And they put the two together, and obviously it seems to flow pretty continuously. But it's one of I've been a Pet Shop Boys fan ever since It's a Sin. I'm not a great fan of West End Girls. I actually think West End Girls is about their worst song. I regard it as rather boring. But ever since It's a Sin came along, and the cover they did of Go West back in 1993, and everything ever since, their album they put out in 2009 called Yes. I love that name. Yes, very positive, very upbeat. And everything ever since. In fact, I've recently got Nonetheless, which was released earlier this year, another great bunch of songs on that. So Pet Shop Boys continuously deliver.
Yeah.
So I'm a bit of a Pet Shop Boys fan, and have been since 30 years now, more than 30 years.
Well, Shane, you put a smile on my face, and I've got to say I'm a huge fan of The Cure, and I learned today that they're releasing a new album. There's 3 songs that you can listen to, Shane. I hope you're as excited as I am.
And on that
it's
note,
always good when a band comes out with a new album and they keep going. I mean, The Cure have been around for a long time.
40 years,
obviously Coldplay as well.
Yeah.
And so that impresses me. And the Pet Shop Boys just seem to keep delivering good song after good song. Maybe their later day stuff is not as good as It's a Sin, maybe not as classic, but it's still up there with the best, I think.
Well, one of our producers, Shane, who has not been around for 40 years but still knows who this person is going to Jimmy Barnes tonight.
Oh, really?
Oh, wow.
Yeah.
That would be exciting.
Exactly.
All right, all the Friday feels. Shane Oliver from AMP. We'll see you next week. Thank you.
Will do. Thank you. Have a good one.
You too. Oh, I enjoy our chats. Let's get across some of these market leaders.
Let's get back to work, as you say. Market leaders today, the gold miners, Regis Resources. We talked about SiteMinder on that Jardin upgrade. Chalice Mining Block, the Afterpay owner, also had a good day, and Perseus Mining up 3.5%.
All right, let's take a look at some of the laggards quickly. And Strike Energy, Sayona Minus, Centuria Capital, Light and Wonder. Also, I note that Zip is down today, so a bit of director selling, off by about 2%.
And in the small end of town today, Antipa Minerals, I don't know that one, the front runner, 12.5% gain. Aravella Therapeutic also up by 12.5%. St Barbara in the gold space, Persian and DGL.
I don't know many on that list, to be honest. Here we go. Worker was actually, that's so weird. It was on the call today. I'd never heard of it before. You should listen to that episode of The Call. My guests actually quite like it, but it has been on quite a tear, down today by 8.5%.
Okay, and having a look as well in what is happening overnight, we get PPI in the US, the University of Michigan Consumer Confidence Index for October. Never a dull moment. I thought we heard Austin Goolsbee overnight, but
I think we
maybe speaking again. Laurie Logan spoke earlier in the week too. But anyway, there's always Fed members speaking.
I feel like they must get paid for these because, geez, I don't know when they do their real work when they're out speaking all the time. Look, next week we get a CBA household spending intentions, which is always really interesting actually as a report. We get overseas arrivals and departures. We'll hear from RBA Assistant Governor Sarah Hunter as well. But the big one in terms of data comes on Thursday with jobs.
Indeed. All right, a big week next week. We're also going to be at the City Investment Conference. We've got the ECB interest rate decision, some China data, US retail sales as well. But let's see where The market has ended the day's trade, not really going anywhere, very flat there on the SIBO 200.
Yeah, and so if we look at the S&P ASX 200, similar moves today, down by about 0.1%, finishing at 8,214. But week to date, up by 0.75%. And as we look toward the European and US Open, we've got US E-minis, both S&P 500 and NASDAQ, very mildly positive right now.
All right, well, that does it for this Friday for the week.
Cheers.
Cheers.
Have a good weekend.
You too. We will be back 9:45 Monday. We'll see you then.